All right, now, welcome back, guys. What do we have here? Thanks for clicking on this video tonight. Listen, this is the Halftime Show, episode 13, and I got a juicy video for you to prepare yourself for tomorrow and the rest of this week, okay? Listen, you do not want to miss out on this video. All right. Again, this is the Halftime Show, episode 14. Can you believe it? Yes, we are here. And this is your mid-week overview to get you prepared for what's happening next. Now, before we get into the meat of this video, let me quickly say this, all right? You know how I like to do, all right? You see the SPY in front of you? You see we catching these higher lows, all right? We're trying to take out some of these highs, all right? A couple of minutes before the market is closed. 3:48, 10 minutes or so before the market close, and we are breaching previous price levels here on the SPY. All right, I know you guys see that, and it's important because these are the prices that I wanted you guys to watch out for. Okay, these are the prices that I wanted you to watch out for. You needed to understand where to look for and what is the sentiment of the market. That's what you needed to know. All right, and so with that said, if you're new, maybe intermediate, maybe you've been searching for the right family, the right community, a place where you can learn and earn. If you've been struggling with consistency, with emotions, all right, the psychological side of trading, then do me a favor. Click that link that just popped up above, all right? That's a free video course. I'm telling you, most people that take it end up seeing results with their very first week, all right, within the very first week. You don't want to miss that, all right? So click that link, all right, because this game is not just about chasing profits. No, it's about process. The process over profits, okay? Let me say that again. The process over profits. It's about turning discipline into income. That's what we do in my group, the Unique Trading Group, where strategy meets mindset and discipline turns into income, and income turns into freedom, all right? So I want you guys to lock in, and I know what you came here for. So we're going to be talking about Jackson Hole in the market and buying those dips. Those dips have been bought up, right? They have been bought up. So what we're going to do is take a quick break, and when we're finished with that break, we're going to have a recap and some guidance for you guys, all right? See you soon. So you have to expect some sort of volatility. There could be some folks adjusting in contracts, they're losing, right? We can see a flush. That could be the catalyst and the excuse for price to flush back down to some of these previous lows. You understand? So we've already been making money, and we are pretty much taking profits, all right? The bulls are taking their profits, you know, as expected. You know, wouldn't you take your profits if you have this amazing run up, right? It's getting ready to be OPEX Friday, contracts expiring, all right? We got some data coming out on these days. Just a perfect excuse, okay? A perfect excuse. And so right here on the 5 minute, you see that we are actually below the opening price up today, which was 644. And so as long as we are below that, we can see bearish pressure. All right, now I had to restart my TradingView account. This is on a different browser. All right, but as you can see, we are still above the point of control, making higher lows. Now I want to go to the 1 hour, okay, and I want to plot some volume. Let's see where everybody is. Let's see where we are in a moment of time. Now I'm going to stop it. Now notice on my screen, okay? Notice on my screen, okay? These two volume profile lines, okay? A fixed volume profile. All right. Now I insisted on this video, right? This SPY market trap ahead, beginner guide to OPEX Friday. I prepared everyone who watched for the SPY for the drop that you seen today. Yes, that's today. Today is the 20th of August, and this video was put out last week. So yes, this is a recap, letting you guys know the accuracy in my my seasoned eye, all right? My keen eye to be be able to notice these things. We fell below, all right, that point of control here, right? It was a trap, and we fell all the way back down to 632, 633, right here at that area. Today, we did that today. And right now, at the time of this recording, it's about to be closing, 4 p.m. We are back at 638. So we went up $6 more since we dropped there and returned right back towards here, all right? So now we're trying to take out these highs, and I wanted you guys to know that, all right? So we're going to get off of that video, and we're going to get to some more commentary, all right? I want you guys to understand some of the talk going around the environment when it comes to trading, all right? So here we go, and we're going to get to those charts and more commentary. Thanks for watching this episode 14 of the Halftime Show. My point is that people are waiting for Jackson Hole, okay? They're waiting for Jackson Hole Friday, and that's the momentum that you see. We could get that momentum, and we are getting it as of right now, right? The SPY is rejecting 639. We have to get past 640 in order to see further upside continuation. You understand? We have to get past 640. Now, people are waiting on the sidelines. You have some momentum, a little bit of a relief rally, right? Some bears took their profit here at another demand zone. Pretty simple, right? Looking left, okay? And so we have what, 2 more days in the market. OPEX Friday is Friday, so we can see this constant choppy back and forth up until end of day Friday, right around the time he speaks. But this is a buy the dip moment, and a lot of stocks have been getting bought up at those dips, so you want to keep that in mind, all right? So we're going to get into some other commentary. I want you guys to see the outside environment of traders, the mindset of traders, and back in the day, a glimpse into how the hedge fund managers, the big people with money, versus people like us, the retailers, in this battle, right, in this world. I want you to just get a glimpse of the emotion and why I say what I say about buying dips. And when people are afraid, you be greedy. These big red candles are discounts for the person who was thinking long term, all right? So let's go ahead and get into the commentary, and we're going to finish up this halftime show with some charts and some guidance to finish off strong, all right? Let's get to it.
Mr. Gill, or should I say Roaring Kitty, turned $53,000 into almost $50 million, and that's what you would call some deep you-know-what value. Of course, we know that not all those who invested in stocks share the same success story.
Hit the home run. Don't go for the grand slam. Hit the home run. You've already won. You've won the game. Yeah. You're done.
There are a lot of short sellers out there that have been borrowing stock they didn't have. In other words, yes, I think there are dynamics where retail investors can get caught, but it's really a dynamic where I think this is going after bad companies.
But here's what's interesting. It is actually changing what Wall Street does, how it does it. There's a report on Bloomberg saying that various prime brokers are tightening the requirements necessary in order to short some of these so-called meme stocks.
You are doing a great job of wasting my time. You're going to filibuster. You should run for the Senate.
The first question you have to ask yourself is, why is there a high shortage?
Surprise.
Generals gathered in their masses, just like witches at black masses.
People are sitting at home getting the checks from the government, okay, and this fair share is a bullshit concept. It's just a way of attacking wealthy people who we all got to work together and pull together.
Don't think for a minute that hedge funds haven't hired people and put them in these chat rooms to get the flames of these things going.
These hedge funds are pulling their hair out because there's no panic selling. These people, they may have bought at $4, sat for $400, went back to 40, went to 350, back down to 110, and they have not sold. All they've done is bought more. There's no answer for that. There's no, it is like art of war mastery by a bunch of idiots who should know better. Like, oh yeah, I'll buy more. I don't care. My paycheck came in. I can afford 2 more shares. And you've got maybe 10 million people doing this who now own probably more than 100 million shares. Eventually, they might own everything. If they keep taking whatever's being offered, there might not be anything left except synthetics and the big funds accounts.
When it comes to hedge funds, Stevie Cohen, now unshackled by the SEC after being suspended for 2 years from the hedge fund industry. He's starting off the new year with a bang as he prepares to open up a new Wall Street firm.
It was hard to get him. They never charged him criminally. They took down his firm, but now because they didn't get him criminally, he's back.
They spend billions of dollars every year lobbying to get what they want. Stop pushing your shit.
It's a rigged casino. The casino's rigged, and their friends make all the profits.
If you and I, Charles, took our car title and Xeroxed it 100 times and sold it to 100 people, and each of them paid us cash, but we only had one car, that would be a good analogy to what naked short selling is. In Texas, simple version, we call that stealing.
How do you know that GameStop executives aren't going to take advantage of this situation, build a brand, and make a pivot, just like Netflix did when they were shipping out CDs in the mail? You don't know. You have no idea.
You piece of shit.
How can you have 136% short interest? How can you be short 40% more shares than actually existed? To a Wall Street mathematician, that's the game that has been played for years, and that game came undone.
That's right. That game coming done 2021, 2022. Keith Gill and the whole GameStop phenomenon. That's what was ruling the game around that time, all right? That's when a lot of people got into the game. That's when I got into the game. That is my origin story, which reminds me, guys, special announcement. I do have an origin story video that I'm going to be posting for you guys, so watch out for that, all right? How I got started, the mind of Coach UV, and a little bit of my history bringing up to now when it comes to trading. It's been a long journey. I want to say it's been a really, really long journey. So I wanted to show you guys some commentary just to get a feel of what's going on and what's still happening in today's time. It's still happening, and I wanted you guys to be aware of that. Now, let's getting back to the charts. All right, now we're going to go to SPY. All right, got 1 minute before the market closed. As you can see my chart here. All right, I just mentioned to you we needed to get above that 639, 640 area in order for us to see high prices, and we are rejecting some of those prices now, but we are still above the point of control. All right, and the daily open today on SPY was, drum roll please, the daily open today was 639.40, and so we are below that. So we can see some lower prices to retrace and get some of these lower lows here. I'm sorry, these lower levels. That's what we can see. But however, we are still above the point of control. The point of control is a very powerful place of bounce, as you can see here on my screen. Now, price action has been moving within a daily range. All right, we've been talking about that. All right, I just released a video. If you didn't check that out, check that video out inside of my playlist. All right, the daily price movement range in the how to beginner section. All right, now it's been moving between this daily price movement range. Now bear with me as I navigate this screen on SPY. All right, the market is closed. The market is closed. We closed at 638.04 for the halftime show, above this point of control. All right, now remember, Jackson Hole is Friday. All right, Powell is one of the Fed members, okay, and he's going to be speaking about interest rates. Are they going to cut rates, or are they going to keep them still? Right, that's the talk. So most of the time, traders, the cash is sitting on the sidelines. It sits and it waits for these, right, in and out, right, quick trades, retailers, right, but the real money hasn't showed up yet. However, you don't know what can happen post-market. The market is closed. We have more earnings and economic data before we even wake up tomorrow, plus Friday. So again, expect price to move within a range, all right, waiting for Powell to speak. Then you get those fireworks. That's what you need to be waiting on. We are still creating higher lows, right? All right, the dip got bought up today on SPY. That's where we are. The dip did get bought up, all right, as well as it did on several couple of stocks, all right? But auction theory style states, right? Auction theory, like when you go to a place to buy foreign cars or art, right, and you have people in the audience with some signs they hold up with numbers, and there's a guy on a podium, and as he says a number for the price of that, for example, a piece of art from Leonardo da Vinci or Leonardo DiCaprio, whatever you want to call him, okay, and somebody wants that picture, and the guy at the podium says, hey, this picture is going for $4,000. Whoever wants that picture that has $4,000 is going to bid for it. They're going to bid. Get it? Trader talk, how you can correlate that. So this is just an auction for price. All right. Where is the true value? How many people want it? That's the message I'm trying to correlate to you. See, this is the halftime show. You didn't know that. You need it. All right. The mindset of a trader and things you needed to understand. All right. So auction theory. Sellers tried to push it lower today, but the buyers are showing up. And the long time frame players, the real money, they're stepping in quietly, accumulating all these dips. All right, you got to see this like the Matrix. All right, there's a Matrix scene. All the noise is moving around you. But if you can slow it down, step back, pull back the layer, right, you'll see the code in the Matrix. The market is not random. It's unique. But it's not random. That's why I call this the unique trading group, where strategy meets mindset and discipline turns into income. What does the half part of that slogan means? Well, you got to have the discipline to wait for your setup to happen before you pull the trigger. Sometimes the market does not give you what you're looking for. Just because you decide you want to go click a button does not mean it has to work. It needs to be more tailored around a plan, all right? And always define your entry, right, where you get in at. Always define your exit, where you want to get out at, and define your risk. How much are you willing to spend for that trade to work out, okay? So again, the market is not random, but it's structured, it's controlled, it's flow. And right now that flow is saying we are in a buy the dip environment, all right? Chips and dip for the whole community. Yes, that's right, okay? So now let's look at the bigger picture, because it's not just about entry day that matters. It's macro. And we've got Jackson Hole coming up. Powell is going to be speaking, all right? The market is nervous, waiting for a signal, okay? Waiting for a signal. This is what people are missing. This is where the sentiment shifts. Think about it. The short-term traders are jittery, selling quick, but the long time frame participants, all right, the ones who control the auction, they're positioning. Here on the daily time frame, you can see that we still have higher lows. We haven't broken structure, but if you see on the 5-minute time frame, all right, you can see clearly the moves that have been made today. All right, we literally opened up around 644. Whatever the opening price was below the previous close, right? And we've been falling ever since on SPY, all right? So that's very clear that we got some selling today, okay? That's clear, right in front of you. However, here's the thing. If you understand that, you know, you don't need to fear the dip. You don't have to fear that dip, all right? You embrace it. The auction process is about value. Who controls the value? Who sets it right now? Value is being built lower so that it can be distributed higher. That's why the price falls. People are trying to get better prices. They're waiting for Jackson Hole. So you got two things happening: profit taking and people being cautious, taking profits from those big movements that we've been having since April. That's what's going on. That's all that's going on. People taking profit from those big moves, anticipating a big event. All right, that's what's going on. So when you hear Powell on Friday, when you hear the macro commentary, don't just react. Step back and think, where is the longer time frame money going? That's the roadmap, okay? Now, section 3 of this talk, all right, is about risk management. I don't even want to have up a chart right now. I don't even want to have up a chart, okay? I don't want to have up a chart, all right? All right? Trade simple, where strategy meets mindset and discipline turns into income, all right? Let's be clear. It's not enough to just buy the dip. If you're trading without risk management, you're not trading, you're gambling. Every dip you take has to be sized right. Stop loss in place, risk to reward, mastery, right? Keeping that risk to reward in your favor. And I'll show you that on the chart. And here's where the most people miss: back testing. They misstep the back testing. You need to back test what you see me do, back test what you're studying with paper trading, back test it to see how many times it worked out within a 25 event period, 25 trades with that same setup. You need to see that. You need to get that data. All right. If you haven't gone back and tested the setups you're taking, if you haven't studied the strategies presented to you, you're playing a blind trading game. So take it serious, guys. Back test until you know the numbers. Back test until you know the probabilities. That's what separates hobbyists from professionalists, all right? Trading isn't about hope. It's about data, process, discipline. You need all three for you to win consistently. You need all three, all right? You need the information so you can execute. And you execute from the manifestation of your process. All right. That's the whole point. Now, let's talk about mindset. This is the halftime show, guys. This is the halftime show. It's all about resetting your psychology. All right. Getting ready for the week. Okay. It's all about resetting your psychology. All right. So we're on the back half of the week right now. Fear and greed are at a tug of war. You guys see that. All right. Most traders, they get caught in the middle. But you're here because you want more. You're here because you're not settling for emotional trading. Buying the dip isn't a strategy, it's a mindset. It's saying, I'm not afraid of opportunity when it comes disguised as fear. That's how you level up, right? Being prepared for the drawdown. Yes, it's a red candle. But if you're buying for the long term at a discount and you know that the stock is valued more and it's at a discount, you buy without hesitating, right? Set your appropriate stop losses, whether that's a mental stop loss or a manual stop loss on your broker account. You understand? That's what you got to be thinking about. Drawdown. If you're trading options and getting time on your contract, then the more time you have, then you have more cushion for the trade to work out, especially if you buy the options on a dip. It's going to go up every time if you're having the right setup. You understand? This is about having the courage to trust your plan, the discipline to execute it, and the patience to let it play out. That's where the real money is made. I hope this is resonating with you guys. This is a different type of show. It's not about the money. It's the process. So here's the takeaway from this episode 14, all right? More chips and dip, baby. More chips and dip. That's what you see. More chips and dip, all right? FTNT, all right? We got back into this trade. I informed the group that I was getting out of that trade, all right? I bought that dip again here on that trade on FTNT, all right? I also bought PSQH, okay? PSQH, a cheap stock here, all right? Donald Trump and his son and some other people are on the board, a bunch of insider trading. They're loading up. Do your research on what that stock is, all right? I also traded Wolf, ticker symbol WLF, all right? Wolf. All right, I informed my Discord group that I was getting back into this, okay? I liked what I seen, and so I hopped into the trade, all right? And we went up 5 to 6% since I put that out in the Discord. And of course, we have Tesla and a couple of other trades, but I'll end with that just to show you that these dips are being bought here at demand zones. See, previous demand zones being bought, all right? And that's what you have. These dips are being bought, all right? The market is feeding us opportunity. The dips are there. The question is, do you have the discipline, the risk management, and the mindset to grab your plate and eat? Remember, process over profits, discipline into income. And if you're ready to level up, don't wait. Join us in the unique trading group where strategy meets mindset and discipline turns into income. That link is below. That's the formula, all right? So drop a comment, all right, with your outlook for today's show for the second half of the week. All right, did you see any of this before it happened? Did you see the dip buying environment happening, occurring, right? Are you a person who's waiting for a deeper move? Which one are you, guys? Which one are you? Listen, consider subscribing to the channel if you enjoyed this video. If you like anything that I've posted this week, all right, or today, consider sharing the channel to someone who you think it'll help. Subscribe to the channel and hit that bell notification. That way you're notified whenever I drop valuable videos. Okay. Again, remember, wait for pullbacks. The dips are being bought. Use that higher time frame to your advantage. All right. That's what matters the most. Okay. That's what matters the most. And make sure you check out my new video, a beginner friendly video called the daily price movement range. All right, a 3 step system for you guys. That's right, for you listening, a 3-step system designed to help you have a trading plan. All right, go and take that to the bank. All right, again, I appreciate you guys watching. I do value your time. All right, smash that like button if you enjoyed this valuable video. Again, and remember, as always define your entry, your exit, and your risk before every trade. It's been a good one, guys. Thanks for tuning in to this halftime show, episode 14 with Coach UV. This is the unique trading group where strategy meets mindset and discipline turns into income. Until the next time, guys, peace.
Now your future bright, did you estimate it cool? It's for the love of music, this one I have made for you. I heard you going through and just know I relate to you. Remove the pride and no facade of believing you. There's no replacing you. Just have the faith to move. And for the love of music, this one I have